We're diving straight into a really significant event in the crypto regulation space, the recent Senate vote concerning the Genius Act.
That's the Guiding and Establishing National Innovation for U.S. Stablecoins Act. Quite a name.
It is, and its goal was pretty ambitious to set up the very first federal regulatory framework specifically for payment stablecoins.
A big step if it had passed.
Exactly. So today we're going to unpack the key parts of the bill, get into why it ultimately stalled in the Senate.
And look at how different groups, the stakeholders, reacted to all this.
Right. And if you find this kind of analysis useful, please do consider liking and subscribing. It helps us keep bringing you these explorations.
Okay, so the Genius Act. It was spearheaded by Senator Bill Hagerty.
And he had backing from Chairman Tim Scott and Senator Cynthia Lummis, who chairs the subcommittee on digital assets.
Yeah, and importantly, this wasn't drafted in a vacuum. They apparently consulted pretty widely.
With who?
Well, people from the industry itself, academics, government folks. The idea was to build something comprehensive for these payment stablecoins.
Okay, so a collaborative effort, at least in theory. Now, it seems like it gathered quite a bit of support along the way.
Well, definitely. You saw major digital asset trade groups like the Blockchain Association, the Digital Chamber, the Crypto Council for Innovation, all pushing for it.
And what was their main argument for pushing it?
Basically, that clear rules were needed to get stablecoins widely adopted. They saw it as key for keeping the U.S. dollar dominant as finance goes digital.
So connecting stablecoin regulation directly to U.S. dollar dominance, that's interesting.
They really felt it was crucial for U.S. leadership in this whole digital finance area.
And it wasn't just the trade groups, right? Individual companies weighed in too.
That's right. Kraken, for example, they really emphasized the need for clear U.S. rules, pointing out that, frankly, other places are moving faster.
Yeah, that's a common refrain, the U.S. potentially falling behind.
And Circle, another big player, highlighted how this could level the playing field.
Between who?
Between banks and non-bank companies involved in payments and moving money. They saw it as vital for securing the U.S. lead in digital currency.
It makes sense. I mean, stablecoins are supposed to hold their value, often pegged to the dollar, right?
Exactly. That stability makes them attractive for, say, online transactions. But, that also brings risks.
Risks like?
Well, ensuring they're genuinely backed, safe for consumers, and not used for illicit activities. That's the core regulatory challenge.
Got it. And Stripe was also supportive.
Yes, Stripe backed the idea of a clear, consistent framework. They seemed encouraged by the bipartisan interest, actually.
Urging lawmakers to keep working on it, essentially, to protect innovation and U.S. competitiveness.
Precisely. And you had venture capital firms, too, like A16's Crypto. They saw it as a positive step for consumer protection and transparency.
Though they also noted it wasn't perfect, that refinements would be needed.
Which is pretty typical for complex legislation like this. Multi-coin capital framed it in terms of national security and economic interest. They argued it would enable faster, better payment infrastructure for everyone.
And then there were coalitions representing payment choices and franchises.
Right. The Payment Choice Coalition and the International Franchise Association. They believed it would boost innovation, give more payment options.
And provide that needed structure for stablecoins, especially thinking about small businesses using them.
Yeah, and the Merchants Payments Coalition saw it as promoting innovation and competition in the payment system overall.
The Bitcoin Policy Institute even framed it as an upgrade for America's financial architecture.
Expanding the dollar network eventually. And groups like the National Association of Convenience Stores saw the potential too, but stressed the need for responsible regulation.
Seems like a very wide range of support. Venture capital associations too.
Yes, the National Venture Capital Association urged it forward for innovation and U.S. leadership in fintech.
Even the Club for Growth seemed positive about progress towards a, quote, stable, light touch framework.
And perhaps most notably, Treasury Secretary Bessent expressed disappointment it didn't advance, called it a missed chance for U.S. leadership and dollar dominance in financial innovation.
Wow. Okay, so with all that backing from industry, VCs, even the Treasury Secretary, what happened? Why did it fail to move forward in the Senate?
Well, despite that consensus, it hit a major roadblock. Senate Democrats ultimately blocked a key procedural motion needed to advance the bill.
And what was their reasoning?
It boiled down to a few core concerns, primarily worries linked to President Trump's past crypto dealings.
Okay.
And a feeling that the bill, as it stood, didn't have strong enough provisions for anti-money laundering, national security, and importantly, consumer protection.
So when you say they blocked a procedural motion, what does that mean practically?
It essentially stopped stopped the bill in its tracks. It prevented the Senate from even formally debating and voting on the main legislation itself, a critical hurdle.
Understood. Were there specific events that fueled these concerns?
Yes, there were reports around that time about the Trump family organization launching its own stablecoin. And its alleged use in a big deal with a firm in the UAE, apparently involving finance. That definitely raised red flags for some Democrats.
And that led to legislative action?
It contributed. Democrats introduced a separate bill, the End Crypto Corruption Act. The aim was to stop officials from profiting from crypto they issue or endorse.
Was that meant to amend the Genius Act?
It was offered as an amendment, yes, but nobody really expected it to pass. It was more of a statement highlighting their concerns.
And there was also a feeling among some Democrats that their input wasn't fully taken on board.
That sentiment was definitely expressed. They felt maybe the process hadn't been collaborative enough from their perspective.
Now, it wasn't just Democrats opposing the motion, right?
Correct. 2 Republicans, Senators Rand Paul and Josh Hawley, also voted against it.
And their reasons?
Senator Hawley mentioned wanting big tech prohibitions included. He likely wants to limit the power of large tech firms in the stablecoin space.
Okay, so a different angle there. And Senator Paul?
He raised broader concerns about potential harm the bill might do to the crypto industry itself, sort of an anti-overregulation stance.
And Senate Democratic leader Chuck Schumer apparently cited the lack of updated bill text as another issue.
Yes, that procedural point was made as well.
Senator Elizabeth Warren was quite forceful in her opposition, too.
Extremely. She argued it would, and I quote, supercharge Donald Trump's corruption, endanger national security, undercut consumer protection, and even risk economic stability. Strong words.
Very strong. And others, like Senator Mark Warner, pointed out the bill text wasn't even finalized.
Right. And Senator Ruben Gallego basically said they needed more time to review it properly, maybe suggest changes.
So a mix of concerns about potential corruption, inadequate safeguards, the legislative process itself, and even worries about overreach.
It really was a confluence of different objections coming together at that crucial procedural moment.
So how did people react once the vote was blocked? Predictably, I imagine.
Pretty much. Republicans, like Senator Hagerty, who sponsored the bill, and Majority Leader John Thune expressed clear disappointment.
Framing it as a vote against the crypto industry and U.S. innovation.
Exactly. Senator Thune even started a process to potentially reconsider the vote, though the path forward was unclear.
What about the pro-crypto Democrats who had signaled concerns?
They generally maintained they were still committed to finding a way forward to reaching some kind of deal on stablecoin regulation eventually.
But not this bill as it stood.
Apparently not. Meanwhile, you had anti-kleptocracy groups weighing in.
And their take?
They were worried the bill, as written, might actually make it easier for illicit finance to operate through stablecoins.
So the opposite concern from the industry's push for clarity and the White House.
They defended President Trump, stating his assets were in a trust managed by his children, so no conflicts of interest, in their view.
And they doubled down on wanting the U.S. to be the crypto capital.
Yes, they reiterated that commitment.
How about industry leaders? Were they completely discouraged?
Not entirely. Someone like Brian Armstrong from Coinbase expressed continued optimism about getting regulation done eventually, sort of a long game perspective.
But regulatory experts have been sounding warnings about stablecoins for a while, haven't they?
Absolutely. People like SEC Commissioner Caroline Crenshaw have questioned how stable and safe some stablecoins really are, especially given the risks from lightly regulated exchanges.
And academics, too.
Yes, academics like Hillary Allen and Graham Steele have specifically warned about risks to national security and the financial system.
Focusing on illicit finance again, and the potential for stablecoins to trigger a financial crisis if not properly regulated.
Right. They strongly advocated against the kind of light-touch regulation some proponents were hoping for.
So this failed vote really throws the complexity of it all into sharp relief.
It absolutely does. It highlights this deep tension, doesn't it, between wanting to foster innovation in digital assets
and needing to address really serious concerns about financial stability, national security, and, well, potential corruption.
Exactly. And the result is uncertainty. Right? We still don't have a clear federal regulatory path for stablecoins in the U.S.
Even though there seems to be agreement, at least in principle, that some kind of framework is needed.
That's the irony. So you're left wondering what the implications of this ongoing ambiguity are.
For the future of digital finance, yeah. And for the U.S.'s place in the global digital economy, it's a big question mark.
It really is. And it underscores why it's so important to keep tracking how these digital assets interact with our existing financial and political systems. It's constantly evolving.
Absolutely. Well, thank you for walking through that complex situation with us, and thank you all for listening.
We hope this analysis was helpful. Please do consider liking and subscribing for more explorations of these important issues.